on top of your house, or even on top of a tree, it's fine. So I know everyone can hear me, then we can start. All right. Guys, I'll try to come back to this page after 5 minutes just to check if you have questions. After 5 minutes, just to check if you have questions. So before we head into this chart, or rather to this platform, let me try and talk to you at least to get you to the basic level. I know some of you are equipped already. I know some of you know more than me, in fact. But I should make sure that everyone is on the same level. I hope that makes sense. You, people like me and you, we are retail traders. Me and you, retail traders. And then there is these guys, these our enemies, the brokers. Oh God, my connection is bad. What can I do? My connection is bad. Can you hear me now? Or are still experiencing some technical issues here? Guys, when it comes to the audio issue, I to the mall, getting some equipment like microphone. They told me that they are only selling essentials, food, kitchen and stuff. They couldn't sell me the microphone. So I just have to wait until yeah, I just have to wait until lockdown. So I don't know what to do now. I don't know what to do now. But I guess we'll got to have. Yeah. All right. So Emma, I can see you are saying I come and go. Can you hear me now? Can you hear me properly now? I tried moving around. I tried moving around. Now I'm just on top of something, but I think it's okay now. I can see my bars are okay now. Can you hear me now? As I was saying, if you can hear me, as I was saying that retail traders is people like me and you, and then the brokers are our enemies. Unfortunately, we cannot access forex without these guys, without the brokers. The brokers work hand in hand with with two people, which are the retail traders and the market makers. Unfortunately, they don't care much about us. They care much about our money. So these people, what they want from us is money. Then when it comes to the market makers, that is their right. That is their license. So they always have to be on the positive side. That is why they want to take our money, give it to the market makers, get their own commission. These people, they're like sales agents. House. When you want to buy a house, you need to get an agent, a property agent, real estate agent. Then the agent will sell you a house that doesn't belong to him. What he benefits is only the commission from the money that he receives from you. So just like the brokers are just like that. They are selling you these NASDAQs, S&P 500, USD ZAR, USD, Euro, USD, whatever. They are selling you those things for a commission. They get the commission from the brokers. Now, there is another gain from us, which is the spread. So they benefit from the commission, they benefit from the spread. When you lose your account, they benefit only the commission, because now when you have an account funded with $1,000 US, when you blow that account, what happens is that your money goes straight to the market makers. Now, because you lost money through JP markets, the JP markets will benefit with the market makers. The market makers will say, "Hey, JP markets, we thank you very much. Take this $5, it's yours, because that guy blown 1,000. You did very very well." So that what is happening. They benefit from the commission. They also benefit from the spread. The spread is actually they all over the spread. They are controlling the spread. They are controlling the spread. You know, meaning if you open a trade of 0.01 lot size, and they on that trade they take a spread of, let's say, they can control it. If they wanted, they could have taken 50 cents, 70 cents. So they have control over the spread. But the commission control over that one. But the more you invest, the more you lose, the more they gain from the commission. That is why when you lose, they will always they will always try to call you and say, refund your account. Have you ever experienced when you just open an account with a broker, you will receive a call from an unknown number overseas, and then when you receive that call, they will try explaining to you that, yeah, hey man, you should fund your account so that you can see. Let me tell you something. Those bonuses, they are visual money. They are like demo money. You cannot use that. Only the only thing you guys don't understand is that when you fund an account with $100, they give you a bonus of $100. The other $100, it is not yours. Food is not even real, because are you telling me these people, they've got enough money to give you? What about the person who funded with a 1 million? They mean they'll give him a 1 million. What the only thing they did is to increase your leverage, and then they wrote a credit of $100 next to your account. Credit is not really, because why is it that when your account goes below the deposited amount, it will give you a margin call, a notification that, yeah, now your account is about to blow. But when you check, you still have a credit of $100. Is because they only increased the leverage. They did not really put money into your account. There is no money, there is no credit, there is nothing. They only increased what? Your this thing is just like your bank account. It's just like a bank account. You do not have the money until you withdraw it. When you check your bank statement, or rather when you check on your app and you find that on your account you've got 10,000, you do not have 10,000. The number 10,000. It's only a number. Those are only words until you withdraw that money. You understand? So it's just like that. It's like that. But other than that, now you understand what a broker does. A broker wants you to fund so you can lose. That's it. When you are gaining, they're not gaining anything. They want you to lose. Until you lose, that is where they get the commission from the market makers. There are two types of brokers, guys. You should know. There are two types of brokers. The first broker is the dealing desk. The dealing desk is broker. It's half broker and it's also half market maker. Meaning these guys, they work as a broker to introduce a retail into forex and everything. But they are also a market maker, meaning they control the market. I hope it makes sense. I hope it makes sense. Okay, so if they control the market, on the other hand, they introduce people into forex. What's going on? What's going on there? Now you should understand, guys, that these guys, they can do pretty much whatever they like, except every money a retail trader loses, they need to bill for. So if you lost money and you do not know how you lost it, you have the right to go and question it. Like here in South Africa, these people are regulated by the FSCA. Now, if they are regulated by the FSCA, you can go and question the FSCA and tell them that, hey, people of yours, they are raping me out, So you can do that. It's your right. Yeah, that's why they cannot do pretty much anything. But 80% of the things they can do. But when it comes to taking your money without your knowledge, without yeah, they cannot do that. They cannot do that. So I guess you understand, guys. I guess you understand. If there's something you don't understand, please let me know. Let me know if you don't understand. Don't let me pass. Okay, now let me go to the market makers. Who are the market makers? The market makers, guys, these are the people supply to the demand. What does that mean? It means whenever we are demanding something, whenever we are demanding a move, like okay, let me just show you an example. We've got, for example, we've got 10 retail traders in the world. 10, just only 10. Just let's just take that number as an example. 10 retail. When we have 10 retail traders, 8 of them they are saying, okay, all of them they've got funded, and 8 of them they're saying the market will go up. And when you check 8 of them, they have they have put their account on account equals to let's say maybe it equals to 1 million. If it equals to 1 million and it's only 8 of them, the other the market will go up, will go down. Since the 8 said it will go up and the 2 are saying they will go down. If the market, okay, the 8 says it will go up, the 2 says it will go down, and the 2 they only have an account totaling to, their accounts are totaling to maybe let's say 20,000. Remember the 8, it's 1 million. 1 million is on, and they believe the market will go up. The 2 is 20,000. They believe the market will go down. Where do you think the market will go? Do you think the market will go up and take that 1 million, give it back to those ones who invested the 8? Or the market will go down and take that 20,000, give it to those who said it will go down, the 2? Guys, the logic here is the market want where the money is. They want to go where the money is. So they will simply go to the direction of who? The direction of the 2. So they can take the money away from the majority. It's supply and demand, guys. Supply and demand. Where there is more, there is less demand. Where there is less demand, there is more supply. It's simple like that, guys. Those who put their money on the line, and you check the total of the amount they've put on the line is so much. That's where the market makers will go against. Exactly where they will go against. So against the 8, it means the 2 will benefit. It means the 2 are right. It means the 2 they went to the direction where the market makers are going as well. I hope it makes sense, guys. I hope it makes sense. Now, if the market makers are favoring the 2, what does it mean for retail traders? It means traders, we should always be on the side of the market makers. Surely it does not make them happy, but find ourselves in. That is the that is the department we need to fall into. We need to be on the side of the market makers. We need. Okay, let me try and give you an example. Another example, so that you can get you can get proper explanatory on this one. Yeah. Okay. Another example is uh, you are going to a shop. When you go to a shop, there are 2 shops: there's ShopRite and also Pick and Pay. When you check, the ShopRite and Pick and Pay have got the same material that you want, but when you check the price of Pick and Pay, it's 50 rand above the price of ShopRite. Where are you going to buy your material? Sense, you will go with the lower price. That is why the market makers are going with the less price, which is the 20,000, because in that side actually they are saving, they are benefiting. That's what is happening, guys. We also need to be on the right side. Now you become, or how do you fall under the right side? This is where this market maker strategy comes from. It's where the market maker strategy comes from. There are people who have studied the behavior. People who have studied the behavior of the market to identify where is it the right time to enter, where is it the right time to exit, where is that happening. how to understand supply and demand on this chart. How do you understand the supply and demand on this chart? That is the question. How do you identify supply and demand on this chart? That is the question, guys. Let me just check if there is any. Okay, guys, tell me if you can hear me. If you can hear me, tell me, because I don't think yes, 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 yes. The market makers always favor the minority. That is true. That is true. So it means you can hear me. Nice. Let me just go back. Let me just go back to the chat. Guys, if you have questions, post them here. Don't let me pass, because from here, where the strategy itself, don't let me pass. If you don't understand the strategy, don't let me pass. I mean, if you don't understand what I said, the introduction, don't let, because from here we're going straight to the strategy. I finish up the strategy, then we're done. So don't let me pass. If you have something you don't understand, let me know. Let me know. Let me know. Yeah. The market makers always favor the minority. That is true, my sister. They always favor the minority, because that is where they are losing much. They are not, in fact, they are benefiting. They will never benefit the majority, because the majority is what they want. They put these guys. They don't lose. They don't lose. Not at all. They don't lose at all. They don't lose at all. Why is that? It's because they can see where our money is. Have you ever been in a trade where you just immediately it goes against you? Have you ever been in a trade whereby you've placed a trade, even if it doesn't immediately go against you, but stop loss maybe 50 pips away, it immediately heads for a stop loss? You will be surprised. You will be shocked. They go for a stop loss. Why? Because they can see. They can see your stop loss. Eh? When you place a trade, okay. Last week I did some analysis on NASDAQ, and then when I'm done with my analysis, I could see that this is this of of news. Sometimes I tend to identify news before they happen, because I've seen it before. So this is a signal. This is a point where they want to release news. So I placed the trade. I remember it was I placed the trade, a sell. I even went risky, like 0.15. On that, can you imagine, with 0.15, you can make 60,000, 100,000 on that trade. I was sure, in fact, that I was gonna benefit that much. Placed the trade. The trade did not even accept. It did not even go through. Why? Because these people, they can see, they know that this guy wants to benefit. They couldn't accept my order. My order was declined. I remember I tried even more than 30 minutes and went to the direction, and then it never accepted the trade. The market just went to my direction, and I was like, yo, in fact, yo, 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 yo. So, hey, these guys, they are they are they're just animals. So, other than that, let me just explain something, which is the market maker's objectives. Because objective, we all know what an objection is. An objective is. These guys, they've got objectives. There is something they want, which is what? Which is our money. Now, when you check the graph like this, these guys, why is it go up here? Mara, they did not even go even that further. They quickly pull back down. What is it that is happening here? They go up and down. They go up and down. Why is it? Why is this happening? Why is this happening? Okay. Who's the market makers? Institutions. Oh, that's a question. Very, very good question. And I have it on my notes. Explain it after this. Okay, so the market makers, we are talking about the hedge funds, the big hedge funds. In fact, top 20 hedge funds, they are part of the market makers. That's why they are even a billionaire companies. So it's the hedge funds, big companies like Google, Facebook, those companies. That is why we have stock exchange. That is why we have stock exchange. So when you change, for Wall Street. Uh, we're talking of Tokyo Stock Exchange, Hong Kong Exchange, London Stock Exchange. We're talking of New York Stock Exchange, which is the Wall Street, of course. We're also talking of Johannesburg Stock Exchange. We're talking of those kind of stock exchange. So every stock exchange is part of the market maker. They control the market. So I'm sure I've answered your question, Emma. The institutions they are talking about the hedge funds, these big companies, stock exchange, all those stock exchanges. They are the institutions and also the banks. The banks are also part of this scam. Yeah, they are also part of. Yes, in fact, they can see you, Emma. They can see you. Yeah, they can see you because you've just placed the trade. You've just placed the trade, but they're already chowing your money. They're already when you've just opened the trade is on. Why is that? These people, they are real scammers, real scammers. But then we have to comply, isn't it? We need the money. We have to comply. We have to comply. We have no choice. So okay, um, okay, guys. If questions, keep asking. I will keep on answering them. Okay, okay. I've opened my other phone here so I can see your questions. Yeah. Let me just quickly head into the objectives. They are objectives is to make you click the button, which is buy or sell. They want you to click the buttons. These buttons. They want you to click those two buttons. If you haven't clicked the buttons, even if you've deposited your money, you can quickly request it withdrawal without even trading. You can quickly request it as a withdrawal. So they want you to click this. Once you put your money on the line, that's what they want. That is what they want. They want you to put your money on the line. That's their objective. Now, what is it that they do to make sure that you use two buttons? What is it that they do? There is something that they do, Pela. What do you think they do, guys, for for them to make sure that you click these two buttons? They create false movement. They create false until you think they want to go to that direction and you click the button. They quickly pull back to the which is the real direction. Obviously, that's what they do. They create a false direction so you can get into the trade and pull back up or down. Okay, right. So as you can see that this trend line goes goes down, and here the market went down, it came in line, it went down, it came back to the trend line, it did not even reach the trend line, it went down, it came back to the trend line, reached the trend line, it went down again. And you could see, and you can come back and educate yourself. All right. So this this uptrend, it was broken here, and it shows that it wants to come back, create another downtrend. Okay, it's fine. I understand that. I understand that. Now, this is how you identify a trend by using these trend lines. Using these trend lines, this is how you identify. We can open another. We can open another pair. You put a trend line. So, guys, I know you keep losing. You keep losing me, but then I just thought let me just continue. So, guys, you can come back and watch. Do you understand, guys? Let me just continue so that you can come back and watch, guys. You could see that the market here was losing momentum here. It was losing momentum here. The market was losing momentum here. The market was moving momentum here. It was. So we should have identified when a market loses momentum is when they are just going. They are creating small. candlesticks. They are creating small candles. This is how you see they are now losing momentum. Even here, they were moving up and down here, as if where they want to go. This is a point where you can identify a loss of momentum. So this is a descending, it's an ascending. A descending, it's an identification of they want to create a downtrend. That's a descending. But it's a point where they want to create an uptrend. So that is the relationship between an uptrend with descending and ascending. Ascending has got a relationship with what? With an uptrend. Has a relationship with a downtrend. Do you understand that? I hope it makes sense. Those are what? Those are the relationship between the two respective trends. Can you hear me now, guys? Can you hear me now, guys? Ah, perfect, perfect, perfect. Is there anyone who can hear me? If you can't hear me, raise your hand. Is there anyone who can hear me now, guys? I said I'm not sure if you can hear me. Can you hear me now? Let me know if you can. All right. Now, like I said, this is descending. This ascending. Let's find another example of descending and ascending. Yeah, okay. Let me just open the 4-hour chart. This one is not a proper one. Okay. This is what? This is descending. This is ascending. Descending, ascending. Yeah. Descending, and now you see they are creating what? They are creating descending. It shows they want to go way down. But ascending, they are not the only material that you should be using to identify if a trend is about to change. You need to identify using trend lines and ascending and the other materials. You cannot use just one material. You can never be sure using one material. So you need to use all of your materials to identify if the trend line is about to change. Material, which are descending and ascending trend lines, and what I'm about to introduce now. These are the entry points. This is how you know if their objective is saying this. I told you about their objective. If their objective is saying they want to go down, then you must enter with a what? With a buy. If their objective want to go up, you must enter with a sell. So I'm about to show you how you can identify these entries. Okay, let's say you've identified the trend line that they are going down like this. Like this. So if they are going down like this, I mean, ask is what does this mean? It means that they are in a downtrend until that this is how you know this downtrend it does not exist anymore. Now if they are in a downtrend, Ramaphosa, go and learn how to wear a mask down. Damn it. Okay. What about the downtrend? What about the downtrend? A downtrend, it should be like this. There will be a trend line like that. will go down. It will go down like this and then back up to retest to the trend line. And then this is where you are. This is where you sell, because you know they will go down. And then they will come back and retest again. And they will continue going way down. This is what? This is a downtrend. It's a downtrend. Downtrend, this one. And then this one, it's an uptrend. It's an uptrend. It's an uptrend. Yeah, I think now you can understand what a downtrend and an uptrend is. So when you've identified, you should know that these are the false move. You should never buy in a downtrend. Never buy in a downtrend. Here, these are the false moves. You should never sell in an uptrend. Always buy. You just need to find a proper location, a proper point to place your what? To place your sell and a buy order. This is an uptrend. This is a downtrend. Always sell, because this is a downtrend. Sell here. You should buy. That's it. That's it. Now, how do you know? There is something else. I've showed you their false moves. Their false moves is this one, this one, this one, this one, and they're using what? They're always using small candlesticks to create these false moves. Always, they're creating small candlesticks to create their false moves. All right, I want to show something else. I want to how you can identify a reversal of a trend. If these people, they are in a downtrend, how do you identify if they want to go down? Okay, they are in an uptrend. They want to reverse to a downtrend. How do you identify a reversal? They are in a what? They are in an uptrend. Ne? They are in an uptrend. It's too steep. They are in that. They come back and create a false move. They continue with their levels. Oh, I did not explain the levels. I will quickly explain. Just now. Create their false move. Continue going up. Like that. Now they break their line. They break their trend. This is where it gets interesting. When they break their trend, do not sell. I am sort of an uptrend, meaning it's time to sell, but do not sell as yet. This is what you need to wait for. You need to wait for them to go back up, because you know that here it's a ball not pass. You need to know that now it's time to what? To sell. Sell now. It's time to sell now. Sell now. Here you sell. Here you sell. Exactly. This is what I'm talking about. You will sell here. They broke the line. You sell here. Now let me just get another example here. They go up, down, up, break the line, go up. This is where you sell. Sell here. Sell here. How do we identify false breakouts? Please emphasize. Okay. How do you identify a false breakout? I will show you. I will show you. I won't forget your question. I will show you. Let me just quickly go back and try and explain. I just want to finish up. Where was I? I was here. Yeah, I was here. Okay. So when this is where you said. Why? Because you can see the M formation. M. It's an M. It's an M. You can see the M here. You can see the M. But what about a downtrend? Yeah. This is an no downtrend. This is an uptrend. What about a downtrend? Let me just quickly show you. And then they will come back to retest. They will come back and retest. They will go down. They will come back and what? And break. Don't buy as yet. Wait for them to come and retest. Huh? Wait for them to come and retest and then you buy. And then you buy. You buy here. I will come back to your question, Emma. Yeah. This is where you sell. This is where you buy. Now, there is something a lot of you are not able to identify. But let me just show something. How do you know how long to hold a trade? How do you know hold a trade? After you've sold here, you should start counting your levels. This is level 1. Level 1. Level 1. Let me try and move this thing. This is level 1. This is level 2. Level 2. This is level 3. So after level 3, you are exiting. You are exiting your trade. You are going out of a trade. So it's level 1, level 2, level 3. 1, 2, 3. 1, 2, 3. These are the levels. After level 3, you exit because you know they want to change direction. Identify a false breakout. How do you identify a false breakout? Let me show you an example of an uptrend. Let me show you an example of an uptrend. Ne? An uptrend. They go up. A false break. They go out, come down for a retest, go up again. You keep holding your trade. They come back and retest. You are not intimidated by their. Let me show you something. Let me show you this. Look at this. They break out. How do you know this is a first breakout? Because you know that this is the first level. Ne? This is the second level, and we are not expecting the market to reverse after second level. This is not what we are familiar to. Familiar to this. The market does not reverse after first level. This is a false breakout. Why? Because it's second level. This is how you know these people. They will go where? They will go up. This is how you know. And then when they break like this, go and take a trend line, readjust it to where? To this point. Did you see that? Because you know it was a false breakout. Here, look at this. They broke through the high. This is how you know that they would have never go down here. They would have never went down here. Because why? Because it was a false breakout. So you adjust your trend line, continue with counting your levels. Guys, come on, guys. Guys, come on. That is top knowledge, guys. Top knowledge, guys. Come on. Yeah, definitely. So when they break out there with a false breakout, you know that icon, these people third level. That's how you know it's a false breakout. They won't go down. Now this is a third level. Ne? It's a third level. I want to show you something else. I'm sure you're still around, ne? Because this is your question. Now, guys, all of you, you should make sure you grab this knowledge. Look at this. Here's another breakout. You know it's about time they go where they change direction. Now they come in. Let me just remove this line. Now they are coming to where? They are coming to break, ne? They break the line. They break the trend line. They broke it here. And they are on third level. So it's to reverse now. Look at this. You know you've got your line here. You've got your resistance level there. This is where the line of resistance comes in. Those who are trading, resistance and also resistance and also supports. This is where they come in. You put a resistance there. When you put a resistance there, these guys retest. But instead of retesting, they go beyond. You see, they've broke your resistance. How do you know if this is a false breakout? Head and shoulder, guys. Head and shoulder, guys. They will quickly come back down. Huh? And when they come back down, they go back to the shoulder to the other previous high there. This is where you enter with a sell. They've created a head and shoulder. Can you see that? They've created a head and shoulder, a head, and a shoulder. This is perfect there. This is where the head and shoulders are coming in. It's because of the false breakout here. It's a good question, Emma. Good question, Emma. Because of the false, they've created a head and shoulder. Perfect. The same thing applies on a what? On a downtrend. Let me quickly demonstrate a downtrend. Let me quickly demonstrate down. 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 Very informative, Emma. Very informative. Down. Breakout. This is a head and shoulder of a downtrend. Ne? You know you've got your line here. You've got your support. They quickly come down and break your support. They broke your support. So this is a false move. Why is a false move? Because you know here there is what? First level. Ah, guys, come on, guys. Ah, come on, guys. Icon. No, 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 no. This is not right, guys. Hey, this is not right. It's like we're having it's like we're having inside information. So, guys, hey, guys, come on. We'll be arrested for this. Second level. Third level. Third level. So after third level, we're not expecting. It's very, very unlikely. I'm not saying it doesn't happen, but it's very unlikely that they will create a fourth level. That's why this is a false breakout. And then quickly pull back up. And then create another what? Another shoulder. And then shoot up like that. Yeah. So show you these things in real market time. This is my what? This is my trend line. This is my trend line. They created one level. First level, they quickly come back down. Second level, come back down. Third level, broke my line. They went beyond. They broke my resistance. They quickly come back down. Ne? Come back down. But ha, this is a downtrend. This is a downtrend. It's a downtrend. It's a downtrend. Why? Because you can see shoulder, shoulder. Come on, guys. Come on, guys. Come on, guys. Come on, guys. This is inside information, guys. This is inside information, guys. So we're talking about in the beginning of the session, those things about and everything. You no longer need those kind of information, because now if you understand this, you are applying that information, but playing that information but indirectly. Indirectly. Do you understand, guys? Guys, are you here? Guys, are you here? Thanks, man. Thanks, man. Yeah. No, it's actually it's actually the experience, guys. It's about experience. Pella have been trading for 3 years now. It's not even 3 years, it's less, but it's two, maybe I'm to August now, because I started trading. No, no, it's 3 years, it's 3 years plus. Yeah, it's 3 years, maybe plus months or 3 months. Yeah, 2 years and it's 3 years and 2 months now since trading. So it's actually the experience. It's actually the experience really much. But okay, as I was showing you the head and shoulders in real time, I'll be able to apply these things in your own capacity. All right. There are two things that you need to. When you are in a downtrend, you can expect what? You can expect a W, or you can expect a head and shoulder. When you are in a downtrend, you can expect. These are your entries, guys. I hope you have them. You have them jotted down. These are your entries that you can have. You can have Yeah, definitely, Emma. Yeah, I had a snap. This one, I wanted to kill it. Yo, yeah, I saw it. It was last week. Yeah, this past week. Yeah, yeah, damn it, I've been waiting for you. Yeah, this apply on a on a on a downtrend, ne? On a, these two, they apply on a downtrend. All right. What about an uptrend now? What about an uptrend now? On an uptrend, you can expect two things as well. Yeah, you can expect an M. I've already told you about this. Expect an M. I'm talking about up there, guys. Up there, when it's about to change the direction, when the trend line has been broken, ne? This is what you expect, and also a head and shoulder. Hey, yeah, yo, okay. In my defense, ne? I started being consistent, ne? In making money. It's been long since I've cracked the strategy, but when it comes to making money, there's a difference between being able to make money and also knowing how to. So you can know how to trade, but you find out you don't know how to make money. There is a difference. But in my case, I knew how to make money a long time ago. Maybe let's say 2 years ago. 2 years ago, yeah, 2 years ago, I knew. I mean, 3 years. I mean, it didn't take me that long to crack the strategy. It took me, I think I was 4 months, 5 months into by the time I started, and then I cracked the strategy, and I was like, yeah, man, I got it. But how to make money out of it? That was the hard part. I knew how to trade, but I didn't know how to make money. So yeah, it was pretty. So when it comes to making money, the reason why it was tough for me is because of I didn't have finance. I did not, and it was not necessarily about the mentor. No, me, I did not need a mentor. I did not, even though I could have had one. But okay, the thing about why it's not like I did not want the mentor. The reason why I did not have a mentor is because the main reason is because most of the people that I knew, they were trading support and resistance, and in my case, I did not want that. I wanted the same strategy as I trade. Then I can let that person become my mentor. I wouldn't just let anyone. Because just imagine you have a mentor who trades fundamentals, technicals. You see, it's very much confusing. You are confusing yourself. So I wanted a mentor who is using the same strategy as me, but because in fact I was by the time I was at Vets, I was at Vets, and then most of the people that were trading, they were using fundamentals, scalping strategies, and I hate all my god, I hated that. So I wanted a person who trades the same strategy. So I had a friend who was trading the same strategy as me. So we're learning together in funds together and try to trade. But then, other than that, I did not have a mentor. And then I started being consistent in trading less than a year ago. I think it's 9 months ago. That's when I started seeing a change. Because by that time, I had some savings, about 1,000, close to 2,000 US dollars. So I had some savings. So I saved that much to invest, and from there, I started, because the first thing that I did was I invested in information before I expect any money, because I knew with the right information, even if it takes you 10 years, 20 years, you have the information. It's in your mind. Whenever you'll get money, you'll be able to do something. So I invested in knowledge first. I was not after money, I did not want any man to infect, because I knew these people, they can use my knowledge against me. So yeah, it was like that. So okay, if you know that now you've identified the entries, ne? If the entries, I'm telling you, you will become perfect than ever. If you entries, trust me, you are the boss. You are the boss. So if you can master this, if you can master these four things, these are the entries, and master how to identify, or how to put, or how to insert a trend line. If you can master that, I'm telling you guys, you're going far. Going far. If you master how to identify a trend, and you also master these four things, I'm telling you, you are going far. This is all you need. This is all you need. The other things are just bonus, but this is the basics that you need. If you understand these basics, too far. You are going far. You are going far. So other than that, guys, I think, yeah, man. I think, guys, with the strategy, I think, guys, you are good to go. I think you are good to go. I don't know. Let's just have question and answers. Question and answer. Can you please ask them questions so I can answer very quick, very very quickly? Ask the question. Ask the question so I can answer them, so we can call it a day. Questions, guys. Questions, guys. So we can call it a day. Let's just spend the with questions. Unless if you are good, then we can wrap it up. Yeah. Yo. Questions, guys. I'm waiting for them questions. I'm waiting for the questions. Yo, 1 hour 20 minutes. Oh yeah. Questions? I see no questions, guys. Tell me if you're good, then we can wrap it up. Yeah, well, when it comes to challenges, my main challenge was always finance. Yeah, it was always finance. Like I said. So getting the finance to fund my account, it was always tough, because in my case, I hated trading a demo account, visual money. I hated that. I didn't want to trade any demo accounts, because with trading demo accounts, you've got no emotions. So, you are just placing trades. You can even just go away. You can even forget that you've opened the trade. A demo account is just not my thing. So I always wanted to trade with real money, because I didn't just want to master the strategy. I also wanted to master my emotions. You know, the one thing that is difficult for most traders is to master their own emotions, to be emotionally controlled when you're trading the market.